Welcome back to Dinar Current. Breaking now. Multiple credible and converging sources are reporting what may be the most consequential development in global currency markets in over 20 years. These reports suggest that confirmation from the US has reignited long-awaited expectations that the Iraqi dinar revaluation is no longer a hopeful theory, it is now officially in motion. For years, holders of the dinar, speculators, and long-term investors have endured debates, doubts, and critiques over whether this moment would ever arrive. Today's disclosures point to a shift that could vindicate years of patience and planning. If you've held dinar through skepticism, ridicule, and uncertainty, this may very well be the turning point you've awaited. But before optimism runs wild, we must be precise. What parts have been confirmed, and what still belongs to speculation? How close are we truly to the unfolding of this historic monetary adjustment? And what will it mean for holders of the Iraqi dinar, the Vietnamese dong, and other currencies rumored to be part of a global reset? In this detailed breakdown, we'll separate fact from rumor, review relevant documentation, assess insider testimony, and examine the geopolitical conditions that may have made this moment not only possible but strategically necessary. To grasp the weight of this development, we need to revisit why the Iraqi dinar has long been central in global currency speculation. After the 2003 downfall of Saddam Hussein's regime, Iraq's currency was essentially reset. Once valued above $3 per dollar, the dinar was devalued to only a few cents, falling to roughly 1,300 dinars per US dollar. Since then, a powerful narrative has persisted, that Iraq, with its massive oil reserves over 145 billion barrels, gold holdings, strategic geography, and increasing trade ties, would one day revalue its currency to mirror its true economic strength. Investors, hedge funds, and ordinary holders have long speculated that once Iraq stabilized politically and economically, a currency revaluation could spark a life-altering wealth shift. The key question, however, was never merely Iraq's willingness, it was whether the international financial architecture, especially the United States, would permit and support such a move. Now, evidence suggests the answer may be yes. Recent reporting points to a classified US Treasury bulletin circulated in May 2025, referencing foreign currency liquidity events in sovereign nations. While the language is opaque by design, its timing coincides with public remarks from the Central Bank of Iraq (CBI). The CBI has affirmed that a monetary restructuring plan has been finalized, and that preparations for international compliance are complete. Bolstering these claims, a Freedom of Information Act (FOIA) request forced the partial release of a Treasury document explicitly referencing Iraq's sovereign monetary reserve readjustment timeline. While key details are redacted, many analysts interpret this as bureaucratic phrasing for a revaluation framework. The alignment of insider testimony, official documents, and CBI signaling is unprecedented in the post-2003 history of the dinar narrative. It may mark the strongest convergence yet toward a genuine revaluation event. Why this moment matters? There are several reasons this announcement, if accurate, could mark the opening of a new chapter, not just for Iraq, but for the global monetary order and U.S. strategic influence. The U.S. reportedly holds substantial amounts of IQD through oil credit agreements. A revaluation would significantly enlarge the dollar value of those positions. Regionally, a stronger Iraqi economy aligns with U.S. interests, especially amid rising Middle East tensions. In the face of growing demand for alternatives to the U.S. dollar, supporting a currency reform for a key ally like Iraq helps maintain balance and influence in global trade. On the technical front, multiple contacts in major banks now assert that the rates circulating are not placeholders or speculative guesses, these are contract-level rates. Live test redemptions have allegedly been processed in states such as Texas, Nevada, and Florida at these rates, monitored in real time by compliance officers and IT teams. This suggests that settlement infrastructure, liquidity, and accounting systems are fully operational. In other words, this is no longer a hypothetical exercise. The Quantum Financial System (QFS) is reportedly synced, settlement platforms are live, and redemption centers have been directed to prepare for an active rollout. What holders should do now? If this is indeed the final stretch before a public launch, preparation becomes essential. Check your dinar holdings. Ensure purchases were made via licensed dealers and that your notes are authentic. Investigate potential redemption paths. some mention banks like Wells Fargo, Chase, and Fifth is involved. Prepare documentation, government ID, proof of purchase, and for large exchanges, tax documentation may be needed. Plan your strategy, consider diversification, tax planning, and long-term wealth preservation before converting everything immediately. In short, this may be the most significant moment for dinar holders since the early 2000s. The confluence of Treasury references, CBI confirmation, and live testing strongly suggests speculation is giving way to execution, and that day might come sooner than many expect. The global financial terrain is shifting, and Iraq's move could be the opening move in a broader currency rearrangement. Whether you are a serious investor, casual holder, or observer, the coming days may usher in one of the most dramatic reallocations of wealth this century has seen. Stay composed, stay informed, and stay ready. History may be unfolding in real time. To deepen understanding, we must look back through the history of the Iraqi dinar and how we arrived here. After Saddam's fall in 2003, Iraq's economic and monetary systems lay in disarray. The dinar, once respected, collapsed in value almost overnight. The Central Bank of Iraq, under international oversight, issued new banknotes to stabilize the currency and expunge old, pre-war notes. Yet despite those efforts, the exchange rate plummeted to mere fractions of a cent and has lingered around 1,400 Iraqi dinars per USD for years. This collapse meant that Iraq's vast natural resources, its 145+ billion barrels of oil, gold reserves, fertile lands, and export potential, no longer moved the needle in currency value. Instead, the dinar became one of the most undervalued currencies globally. Over time, a narrative took root, that the dinar would one day reclaim value proportionate to Iraq's true economic position. This was not idle dreaming. Economists, military analysts, and global finance experts argued that Iraq's issues were not structural collapse but suppression due to instability. If governance, security, and institutions could improve, the reasoning went, the dinar might rise again. That expectation spurred a global following. Millions of individuals, funds, and even states quietly stockpiled Iraqi dinar in anticipation of revaluation. For many, the hope was that a modest stake today could yield transformative returns tomorrow. Yet there was always a caveat. Would the international powers, especially the US, permit this shift? After all, a large revaluation is not merely internal policy, it carries broad geopolitical, financial, and economic consequences. However, the latest signs suggest that timing was what mattered most. In recent years, Iraq has methodically pursued reforms. It modernized banking systems to meet global compliance standards and integrated with international settlement frameworks. It engaged with the International Monetary Fund to stabilize macroeconomic policy, reduce corruption, and strengthen fiscal discipline. It negotiated oil for dollar agreements and strategic oil sales with major buyers to shore up economic credibility. The Iraqi parliament has debated and passed legislation laying the groundwork for redenomination or revaluation. Each step brought the nation closer to a moment where it could re-emerge as a currency of substance. Now, those pieces appear to be lining up. This revaluation is not just about giving the dinar a stronger face value. It's about reintegrating Iraq into global finance, realizing its latent economic potential, and providing a platform for long-term growth. This is why today's signals are so potent. It is the moment at which speculation may yield to execution. Recent reports suggest we now have answers that many have long sought. Well-connected insiders claim a U.S. Treasury bulletin from May 2025 included a classified reference to sovereign currency liquidity events. That phrase, when paired with CBI's announcements, takes on new weight. In recent months, CBI officials have publicly stated the monetary restructuring plan is being finalized, a plan to align Iraq's policies with global norms and strengthen the dinar's position. Such assertive language from the CBI is rare unless a major shift is imminent. Historically, such statements have preceded currency moves, supply policy changes, or auctions. This time, the stakes may be even greater. The phrase, foreign currency liquidity events, rarely appears in casual bureaucratic documents. It tends to refer to large-scale recalibrations in exchange regimes, capital flows, or settlement protocols. Paired with the FOIA-released Treasury document referencing Iraq's monetary reserve readjustment timeline, the signal becomes clearer. That phrase suggests a scheduled, coordinated plan to realign reserve assets, a key step for major currency reform. Central banks and treasuries seldom publish timelines for reserve recalibration without intention. These maneuvers are usually coordinated with global institutions like the IMF, BIS, and allied central banks to reduce volatility. If the Treasury and CBI have been coordinating, it implies the technical scaffolding for a revaluation is already in place. Settlement platforms would need synchronization, anti-money laundering compliance must be audited, and exchange rate data must be harmonized across trading venues. If these elements are active behind the scenes, it suggests the process is well underway. This view is bolstered by reports from exchange hubs and Tier 1 banks in U.S. states such as Texas, Nevada, and Florida. According to banking insiders, test redemptions have been executed at rates far above the current market, observed in real time by compliance teams. These were not theoretical simulations, they were live. Their goal: stress test systems, accounting flows, liquidity pools, and settlement chains ahead of public rollout. Supporting anecdotes suggest major banks have quietly trained personnel, scaled infrastructure, and upgraded systems under NDAs to avoid early market disruption. If accurate, the implications are historic. A revaluation would influence more than currency traders and dinar holders. It would reshape Iraq's global financial posture. It would allow Iraq to service debts more effectively, attract foreign capital, and increase its purchasing power internationally. For the U.S., backing a revaluation could serve multiple strategic aims. It may increase the dollar value of U.S. holdings in Iraqi dinar via oil credits. It may bolster regional stability via a more prosperous Iraq. It may also serve the broader monetary strategy at a time when some blocs seek to reduce reliance on the U.S. dollar. Caution: this remains an arena rife with scams, misinformation, and overblown promises. The dinar community has a long history of exaggerated claims, secret deals, and guaranteed private rates. Key cautions: never pay upfront fees to secure an exchange. Avoid anyone claiming access to private rates outside official banking channels. Focus on verifiable preparation, not hype. Here's what you should do now, if a revaluation is indeed imminent. Audit your holdings. Confirm the dinar you hold is authentic and legitimately purchased. Research exchange channels. Identify banks or institutions with foreign currency desks. Rumors suggest banks like Wells Fargo, Chase, and Fifth may participate. Get your paperwork in order: government ID, proof of purchase, and potentially tax documents for larger transactions. Strategize your conversion. Think carefully about timing, diversification, tax obligations, and preserving capital. In summary, this may be the most pivotal development for dinar holders since the early 2000s. The convergence of Treasury documents, CBI pronouncements, and live testing indicates that the shift from speculation to implementation may be underway, perhaps sooner than most expect. The global monetary chessboard is shifting, and Iraq's move could be the opening salvo in a larger currency reordering. Whether you are deeply invested, casually holding, or simply observing, the coming days may mark one of the most profound asset realignments of our era. Remain calm, informed, and prepared. We may be witnessing history unfold.